Hello, this is Brian Shannon from AlphaTrends.net. It is Wednesday, the 16th of July, 2008, and the market closed with a pretty good gain here today. Obviously, we still remain in a solid downtrend, and nothing's changed here as far as that downtrend goes. But there was obviously, some good strength today, and something that I think a lot of people could have participated in, as the way that it developed here the last couple days, the market was kind of giving us clues. I had pointed out this morning that we had this higher low in here, and then when the market made it past that little level of resistance here from the last couple of days, just below 124, then you'd seen the 5-day moving average taken out as well. And now I think you can say that the buyers are clearly in control of the short-term trend, but only the short-term trend. Perhaps it develops into something bigger, and we can look back, 3 weeks from now and say that was the low. But for now, we're still in a primary downtrend, and you have to view these rallies with suspicion. It doesn't mean that they don't provide excellent trading opportunities, because obviously that's exactly what we have here, is that we've seen, in particular this little downtrend here, that's the resistance that was broken that really led to the afternoon gain as well, and it showed that the buyers had conviction. But pretty much all day the buyers were in control. A little bit of initial volatility in here. We tested that VWAP, and then it was just a real nice short squeeze rally basically throughout most of the day, as some of the most sold off issues were the ones that it benefited most. It looks like this market could be headed up towards its first level of potential resistance near 126, and what we want to do now is we want to see that hopefully this level in here near about 123 and a half or so, we want to see that level hold as support. If we get a pullback, and then that would actually be a real nice entry for the people who can handle the risk of trading a short-term uptrend within the volatility of a larger downtrend. So there's still a lot of reason to be concerned about the overall health of the market, but clearly buyers were back in here today, and it looks like it can continue to that they can hold that strength here for a couple sessions, as it seems as though the news just got so bad that we might have just run out of sellers for a little while here. This market is still very deeply oversold here. Now we're seeing the first signs of a bounce. We'd seen this failed breakdown yesterday, and then kind of this higher low below this level right here of prior support. And from these fast moves, we often get fast moves, or other people say from failed moves we get vast moves. So either way, it looks like the buyers are back in control for now. But again, I would think that basically 123.30, let's call it, getting back below there, then I think you want to be a little bit more cautious once again in the short term. If we take a look at oil was the big story again here today. We had seen that first crack develop yesterday, and I'd said that basically often it's the fourth test of the trend line that we see it break. It did indeed break. It also took out this low from last week, but it still remains above this more important level of support at about 106 or so, and we've got a rising 50-day moving average. When you've got a rising 50-day moving average, it's still innocent until proven guilty, but clearly the large volatility suggests that the forces are kind of changing in here, and I think that in any rallies, then perhaps you want to look for those rallies to fail, and then look at an issue such as DTO if you are, again, super aggressive. This is trading against the primary trend. The primary trend in oil is still higher. So, but the DTO gives you an opportunity to take advantage of any of that. This level, I think, will hold for a bit, 106. But if it fails to hold, then we could get a much deeper sell-off, and that would, in turn, I think, would obviously provide a better bid for equities as well. The IWM, we've seen that this level right in here takes on more significance because we've bounced from it once again. This 64 level is important as far as support goes, and we're seeing this bounce develop in here. Real nice bounce today, actually. 3.75%, and we're seeing it get back up towards the top end of the recent range in here, and where we had seen this prior support. So the potential that maybe we went a little too far too fast today, but there's no signs that this market has slowed down. I think that there's a lot of shorts that are getting squeezed hard in here, and they're all basically running for the exit. And that when you get the short sellers in there covering their positions, and you get fresh buying as well, that leads to sometimes exaggerated moves in the direction of the squeeze. So we could still see further upside in here if we take a look at the 30-minute time frame. This level right here, this is where we're at. I think the next potential level of selling will be encountered at about $69.50 a share. We had seen in here that that this downtrend line had been, this, well, basically, if we touch here, here, and then there, that this is where the real buying began. We'd seen this higher low in here as well, a test of these lows. So we've got some encouraging signs here. It seems as though the worst is behind. You can take, good long positions in here, but with a declining 10, 20, and 50 and 200-day moving average, be very selective. We're starting to see a lot more earnings reports coming out. That will make it more risky on a stock-specific basis, but in terms of a macro sense, it seems as though the worst selling is behind for some of these markets for this leg lower at least. We came down hard and for a protracted period of time. Now we're going to see some relief of that, it appears. And you could even begin to look at Fibonacci and say from this high to this low, we're right there at the 38.2% level. The 50% retracement would take us up to that 69.5 level as well. As far as the S&P 500 goes, we could draw some Fibonacci in here and potentially come up with this 126.70 and then 128.65 above that. But keep in mind, the S&P 500 is more damaged than these other markets, and you could still make the case that this trend line hasn't been broken yet. We're right up to it. So still have a lot of reasons to be very careful and selective as far as what it is that you trade. Let's take a look at the financials. They were up 12% today, and I said yesterday no reason to be looking for buying in here, and that means from an investment standpoint. Obviously from a trading standpoint, there was a huge rally in here today. If you look at it, again, a little bit of initial volatility, pulled back to that daily VWAP, hit it once, hit it twice, and then it was off to the races as the shorts just got buried in here today. But really just a blip within this overall primary downtrend. The downtrend hasn't changed. Yesterday we saw the massive volume, and I said it's not a timing tool, but it's something to be aware of, that a lot of times the biggest volume occurs near turning points. So maybe we get some further strength in here. If we take a look at the important levels for this market, it's important. It's nice to see, not important, but it's good to see that it got back even above this level here. So maybe if we even get a pullback right now, you could look at this as an inverted head and shoulders pattern that could lead up to 21 or so, and that's where we have traditional prior resistance as well that could slow it down. So I still think that the primary trend is lower, but for aggressive, disciplined traders, there's just been some fantastic opportunities in here. But don't forget about risk management, because as good as it looks one day, we've seen these rallies in the financials, these huge one-day rallies in the financials before. There's been a lot of volatility on the way down, and some of the biggest moves occur, biggest upside moves occur within a primary downtrend. So you can't get too excited, but perhaps it develops into something further. What you have to do is remember risk management and just use a prudent strategy for putting your stops in and saying, as long as it makes these higher lows, I'll keep ratcheting my stop up underneath these higher lows, and then let the market tell you when to get out, rather than saying, well, my price target is 20 or my price target is whatever. Listen to the message of the market and the definition of trend, higher highs and higher lows, and that's what we're seeing here on the very short-term time frames. So on the very short-term time frames, it makes sense to be a long-side trader in here. The NASDAQ 100 also had a great day, obviously up 2.5%. Let's start with the daily time frame. You can see that it's made these lower lows in here a little bit, and then began to yesterday recover that is show a green candle at least, and it was actually up a penny on heavy volume yesterday. In looking at that, you can see that it made this lower low this morning, and then I'm sorry, that was yesterday. Here's today's trading. It made that lower low and recovered yesterday. That was good to see that it got back above there this morning. It made that higher low right here and kind of tied this level, which turned out to help create this inverted head and shoulders pattern. Let me switch it to a 10-minute time frame so we can see that a little bit more clearly. I'd pointed this out twice on the blog early this morning when I put out a post that said higher lows in here. You can see the outline of that inverted head and shoulders pattern, and also the neckline in here that I pointed out. When the market took out that neckline, that's when we saw some of the real strength and some of the more confidence in the strength. I think you could trust that it was going to rally a little bit better. And when I say trust it to the degree that we've got a bigger reason besides just guessing that it's down too much. We've got this higher low, and then it created that higher high right in there. But here on the 5-minute time frame, you can see this real nice pattern intraday of these higher lows and higher highs. And when it took out this little level of resistance here, that resistance became support and then provided the launching pad for the next little rally in here. So the NASDAQ looks like maybe it could head up towards that $46 level. The $46 level is one that I've been talking about yesterday, saying that basically if it got above 45, then it looks like there's probably a good chance that we can head up towards that 46 level. If we take a look at the height of this pattern, 43.5 up to the next neckline at 45, it would actually suggest a price target of 46.5, and that's where we'd seen the prior support that broke down here and added to the next leg lower. Overall, we remain in a downtrend on all the daily time frames. Short term, we've seen the big battle being fought in here, and it looks like the buyers have control for the short term at least. It's their game to lose, and because the primary trend is lower, you just have to be extra careful when you are trading alongside setups.